Hi guys, today I'm here with my trusted friend and realtor, Austin Bouchard, so we can show you guys how to finance your first real estate deal. Okay guys, we're gonna go over a few things here. We're gonna go a few of the common loan types, and then we're gonna tell you actually how to get into a deal with little or no money down, probably less than $5,000 out of pocket to get into your first deal. So to jump right into it, you're looking to buy some property and you're trying to figure out, what is the best method for you to actually finance that purchase. More likely than not, you're going to need to finance it as, doing a whole cash offer requires a lot of money for a lot of people, and it's really not necessary. And honestly, I personally wouldn't even recommend it if you're trying to get into real estate as an investor, because you're simply going to get better returns with a financed purchase. So we're going to get into a few of the ways, different loan types, different things to consider when you're trying to get financing for your first real estate deal. All right, so Austin, deals with a lot of clients, and he's going to tell you a few of the most popular loan types that people use to actually get houses.
So the three that come to mind first are going to be, if you're going to do an FHA loan, Federal Housing Authority, VA loan, which is for veterans only. It's a lot more lenient on some of the terms, similar to FHA, but you can actually go 0% down going VA, and then one of the most common can be going a conventional loan. So kind of to determine which loan is going to be best for you, it all depends on your financial situation. Like Daniel said, you guys are investors. You're looking for, trying to make the most money that you can, and I get it. I totally get it. Obviously, leverage is going to amplify whatever returns property is going to give you. So if you can, now I'm not telling you to over leverage yourself. Don't only buy something that you can consistently, in your head that you can consistently make the payments on if somebody weren't to be renting it, right? But it first comes down to your financial situation. FHA, we'll start with that one. FHA, you usually go 3.5% down. You can go higher. They have certain down payment assistance programs if you want to go lower, but typically the most common product, FHA product, is FHA 3.5% down. Rate's real good. The only issue is, especially in today's market, it's really tough getting an FHA offer accepted, because with an FHA offer or with an FHA loan, the lender has to have an appraisal done with the property, and with the appraisal, they have certain appraisal conditions that have to be met in order for the lender to actually give the loan. And so as a listing agent, I would be less likely to accept a FHA offer compared to a conventional offer if they were apples to apples comparison, just because of the fact they have now it's not real stringent, but there are certain criteria, like some things they'll bellyache about, GFCI outlets, having handrails and like going upstairs, that sort of thing. And so a seller just doesn't want to deal with that. They're more likely to accept a conventional offer. Now, like I said, going FHA, some of the terms are a little bit more lenient. So you can, if you're, like for example, right now we've got a client going $100 down on FHA loan. The credit scores can be a little bit lower. The rates are usually pretty good, and you don't have to put as much money down. Now, moving on to conventional, they have conventional 3%, 5%, 20%, 10%, all sorts of stuff. Typically, if you're going conventional, you have to have a little bit higher credit score.
And guys, one quick interject, one thing to consider when you're choosing an FHA loan is that, your rate might be pretty good, but your actual APR, which is the combined rate of everything built into that loan, is going to include mortgage insurance, which all FHA loans have to have, and that's for the life of the loan unless you're putting a substantial amount down. And you need to factor that in, so your actual payment with an FHA loan is going to probably be higher than with a conventional loan of the same amount. And also keep in mind, with any conventional loans that are you're putting under 20% down, 5%, 3%, 10%, you will have to pay mortgage insurance on that loan until you get to 20% equity, okay? You can also prepay that mortgage insurance, and sometimes that's cheaper when you close on the property, but you will have to pay mortgage insurance, which will make your payment a little bit higher until you can get to 20% equity on the property.
as far as mortgage insurance goes, usually you only have to give mortgage insurance if you're putting less than 20% down.
But yeah, FHA, you're gonna have to pay mortgage insurance for forever with an FHA loan.
But if you're going conventional, you'll only have to pay mortgage insurance if you're putting less than 20% down. And you can get that removed once you hit 20% equity. If you're going FHA, you can also refi down the road. You know, today, right now, that's not something I would suggest. I would just, pay the mortgage insurance because of how low the rates are. You're looking at, and this is market dependent. In my market, typical house goes for between $225,000 to $250,000. But your mortgage insurance is between like $50 and $150 a month. So that's pretty standard. Don't be afraid of it. If you're going after leverage, you can afford the mortgage payment. Leverage yourself.
Yeah.
Amplify returns. Financing a deal is way better than paying cash.
Guys, one cool tactic for financing your deal that's going to make getting financing easier for you is actually living in the property, whether it be a house or a small multifamily like a duplex, fourplex, something like that. Anything 1 to 4 units, you can actually live in it and get you a primary residence loan, okay? And that will enable you to do creative things like a 5% down payment, and you're gonna get much better rates. Not like super great relative to an investor rate, but it's definitely, gonna be maybe like 0.5% better than with a commercial finance rate if you were to live in the property like I'm doing with this place. Also, I've talked to a lot of banks, and some banks will give you 20% down on a commercial loan, but a lot of like lenders with brokers and things, you're gonna have to put down 25% in order to get a 30-year fixed mortgage for the property, or less terms, something like that. So that really requires you to come up with a lot more money than say a 5% house or 5% down payment than a 25% down payment.
Kind of running off what he said, I would highly recommend the first property you buy that you actually occupy the property. You're gonna get, like he said, you get a better rate, you get to live there, and then down the road, you can buy another property, hang on to that one, and keep that rate. You can only do that so many times. Talk to your lender. There's certain rules and regulations. You don't wanna get in trouble, you don't wanna commit mortgage fraud. So you don't have any money and you still wanna get your first property. What do? Well, what I'd suggest is talking to a lender, find out if there are certain down payment assistance programs. Here in Missouri, they have the Missouri Housing Development Corporation. They've got a program where they'll gift you up to, I think it's 4.5%, it might be 4% of the loan amount. So say you're going FHA, put 3.5% down. Well, if you fit MHDC's criteria, they will gift you the full down payment. So the only money that'll be out of pocket on your end are gonna be for inspections, title work, pay for an appraisal, but that's about it. If you're in a certain, depending on the market, you might even be able to ask the seller to pay your closing costs. What you can do is you can finance the closing costs. You can ask, say you're gonna give your closing costs to be $5,000, offer the seller $5,000 more than what they're asking. Ask for a $5,000 closing cost credit.
Okay guys, if you found that information helpful, please hit the like button and subscribe for more awesome content, and I'll see you in the next chapter.